I'm going to talk to you a little bit about what I did wrong my first years in build to rent space and just management in general. Sometimes I look back on those first years and wonder how the hell did we move from the chaos of everyday management to continuing that chaos to over 3,500 doors under management, from one to over 3,500 doors. And today I just want to talk to you a little bit about my first years in really property management in this build to rent space and what I really did wrong. And if you're thinking about actually getting into this space, you might not have to make some of the same mistakes I did. Now, of course, I now run thousands of doors across multiple states. But in that first year, I definitely didn't have it figured all out. So I'm going to share some of the things I wish I would have done differently. Now, whether you're looking into single family, multifamily, or building out BTR communities, I hope this will save you some time, maybe some money, and a lot of headaches. So let's just get into it. Let's talk about mistake number one. I didn't define what I was really solving in property management. My first years, the mistake wasn't just the tools I didn't have or the tactics I didn't learn yet. It was not defining the real big picture of what property management is. It isn't just the collection of rent and fixing stuff. It's building systems that turn assets into reliable cash flow. I needed to think how the investors think, protect the asset, and keep residents happy enough to renew, which in turn keeps the investors happy. So I had to ask myself, what are we really solving here in property management? I'm going to just give you the three things to think about. Revenue. What's that reliability? That means consistent collections, steady occupancy, and strong renewals. In the beginning, I was just all about leasing these units and getting them stable and just trying to get bodies into units. There's a lot that I learned and came across that, hey, by the way, these are going to come up for renewals. What am I doing to get those renewals so that I don't have a bunch of units to lease out again? Now, how about cost control? On the management side, that means I need to think about staffing. I couldn't start to do it all anymore. I was the property manager, the leasing assistant, sending out the leases, managing the accounting, maintenance. So now we have to tighten up the staffing. Think about who we need to bring on. Tightening up the maintenance costs and which vendors are we going to partner with so that there's no waste. And then the asset care. Fewer surprises to those investors, smarter turns, faster turns, and planned upkeep. So I'm going to tell you where I really went wrong. I went wrong by trying to do it all myself. I was the best at leasing. I was the best at relationships. I was the best at sending out the contracts. I knew my owners and my investors, and I was able to sell our services, but that's not scalable. We weren't able to keep up with the communication pieces. It's really important that when you start to have tenants leasing units and you've got their communication and communicating to investors to say, I've got your property leased out. I didn't have the systems, the people, and the operations to scale this. So I had a very unclear blueprint of who does what, that it all didn't revolve around me getting something done. The 100-hour work weeks, I just couldn't keep it up. My response times just started to lack, and then I had to continue to redo work. So what I do now and what our teams do now is we start with a clear vision of what are we here for? What do we need and how do we need to do it? It's a clear ops thesis. We start with what is the target outcome? Well, we got to fill units. We got to have a good occupancy. We need to have a high renewal rate. Our turn time needs to decrease. Our work order response needs to increase, and our satisfaction to our residents also needs to increase. And our service menu, exactly what do we do for owners and residents? Which roles and which lanes do we have people in? Who owns the leasing? Who owns the maintenance and triage? Who owns renewals, documents, reporting, communication? These are all pieces that I had to start to understand and build. So if you're looking at this from a high level, it's okay to start small, but you have to start to realize that this starts to compound really fast because you start to add more residents. You start to add more owners. You start to have internal communication. So communication, a plan of operation is key. Who is responsible for what? Are you going to have a hub and spoke model, which means you're going to have departments focused on certain pieces of the operation. So to bundle this all up, it took a lot of pain points to really understand operational flow. And there was a lot of things we failed and did wrong. But it's how you learn from those and how you build better systems and better communications. So really in closing, what you really need to think about is scalability, systems and operations, and learn that the revenue reliability is important to your investor. Cost control is important to the management company so you continue to scale and grow. And really it comes down to the asset itself. You want to make sure that asset can continue to get an NOI for that investor year after year after year. Even as it ages, you need to continue to plan to increase that NOI. Now let's jump into mistake number 2. Now, when thinking about this, I really didn't know a ton about property management. I knew what it was. I kind of had an idea on the surface of what it was. And this is by far the most complex company that you can think about. The amount of communications, operations, and things you have to plan for is insane. So I really didn't have a very good idea of how to build this. We designed it like a for sale and not for operations. So originally I made decisions like we were selling homes, not operating rentals. So in the beginning, I wasn't thinking when we were taking these properties on from the builder, like how does the flow work? And what is parking going to look like when we start to fill this up? Do we need a leasing office? Probably. So we had tiny misses that became daily frictions for myself. And then as we started to bring staff on, and then ultimately as residents started to live in these communities, it caused that friction within the community. So thinking about when you take on properties and what type of properties and how does it flow, it's important to understand what asset you're taking on. And it's not just, I'm selling this. I need to think about this in a bigger picture. So thinking about how does the community flow? What do I need to bring in as far as my assets to that community? Who are my team members? What are we bringing in so that community can sustain long term? These are all things that I was naive in the beginning. I didn't really know how to make a community operate well. And as we continued this model year after year, by giving informational feedback to those developers, those build-to-rent developers that weren't actually looking at how is this project going to last long term. So really that mistake that we made, number 2 here, is not actually looking at what that asset or that community is going to bring years down the line. And what do we have to prepare for it? We need to open up our mouths. We need to say it to that builder, that investor, to say, hey, these are the things that are going to help this community last long term. Now let's get into mistake number 3. This one was interesting. When I trusted the builder and the sales team on a pro forma for the community, instead of doing our own, what we really can hit on the market, not just a sales or a pitch. So I just believed the pro forma, the lease up timelines, and I trusted the sales teams and the builder that they were right and that we could hit those marks. Big lesson here is I can't trust a sales or builder or developer team unless I dig into it and can actually bring market value to those pro formas and the budget. They want to sell something. So on paper, the dates when they say that we could fill it, occupancy rates, and the amount of rent that we can get during a lease up, stabilization, and things are in construction and a mess. So in reality, that pro forma may come true in year 2, probably 3. The problem is those small, inconsistent numbers and the slip up from the builder, the development team, they don't add that in as contingencies. So there's no model path or plan put in place to go through start to build through stabilization. So there are things that builders, sales teams, they don't realize, and they don't build it into that deck or that pitch deck or anything that they're selling you on. They are looking for that sell and they're hoping to hit those ROI numbers. But what we have learned is we create our own and we present it so that we can stay within those margins. So here's the rule now. It's always trust, but verify. And this is a great investor piece. You can look at something, but you need to do your own due diligence. Do you trust everything they say? My experience is no. We want to verify. And a lot of what we do is on site with the builder, with weekly sidewalk visits, time spent at the community, looking at that timeline, and then looking at the quality of build. Can we hit those prices? Can we hit those timelines? And ultimately, does that pro forma and that snapshot consistent with the build and the project and the timeline? If the builder doesn't build it, you're not getting those anyways. We have to be involved early on with the communications, with the build group, with really the visionary. And what are you trying to sell to your end investor? Is that actually going to come true? The numbers are important. Your timeline is important. Your stabilization is important to show reality. Now, investors and investing is a risk, but our goal in our management and our operations is to actually show that risk and contingencies and plan ahead and then communicate it as we see it coming. Now, we try to predict, but ultimately we want to make sure that we're giving the best information right in the beginning. And then as we see it, we adjust to it. So if you can't verify it with your own eyes, what we have learned, show up on site, see what the builder's doing. How is it going? And then how is our lease-up plan going to reflect the reality of what we're seeing? So if you want to avoid those reputation hits from your sales or your development team or your institutionals that are pitching this, you really need a management group early so that they can help with the reality of that lease-up plan and how that build and stabilization is going to go. All right, I want to get into mistake number 4 that I've done. I hired cheap instead of the right people. And again, I tried to do way too much myself, or actually forced people in the organization to take on more than they can handle. So again, you can only do as much as you can handle and the capabilities of those people. So we've now created a hub and spoke model where we define our resources, we define our team, we put them in areas where they can succeed. We are continuing and always continuing to develop the best practices and use case for our people. So property management gets a lot of burnout. It gets a lot of flack because people are overworked, too much communication, get bashed in by residents. It is a thankless and thoughtless industry to most. But what I have learned is to get the right people in the right seats. And we're continuing to develop those where organizations and parts of your organization are within sectors, with accounting team, with leasing departments, with operational departments, maintenance divisions, people in their respective fields of area so that they can actually succeed. So we lean on that core perspective now. Instead of the old property management way of like, they can handle it all. Let's get a property manager. Let's just put them out there. Let's let them market. Let's let them lease. Let's let them do everything. And that's where the burnout comes. So actually thinking about the organization, thinking about the product do you have? Do you have SFR? Do you have multifamily? Is it build to rent? How are you modeling this? So think about those things before you get into it. How are we going to manage this product best for the investor and the residents? We have 2 people here we're dealing with, 2 customers, the investor and the resident. Resident pays the rent, which then in turn pays that investor. We have multiple people involved. And what I have learned is we need to hire right, think about that operation, and put the right people in the right seats. All right, let's go on to the final and fifth mistake that I have made. I overpromised owners and investors. Now, a lot of this is I did not verify. I trusted. So this comes down to the very beginning. Am I doing my own due diligence before I present information to our investors? So I would promise timelines and returns like everything would go right, and it rarely does. Delays happen from the builders, market adjustments, things outside of our control. And so if we are not clear, or if we see it and we don't communicate it, that's where our investors start to question. So we come up with a whole new way of presenting this to owners. We don't overpromise. We have clear directives. We have clear information of about the timeline that they can expect revenue on the property. How long during the current market can this take to lease up? If we're stabilizing a new community, how long are we seeing this? We give projected timelines, and if we see those start to shift, we are communicating those early. We are coming up with new plans, new operational shifts, things that we can control early and then communicate those to our investors by showing those reports, those updates, those data points. So things that I have done wrong, I overpromised and sold the world. But in reality, you need to come back and look at it and communicate to those things. You still want to hit those projected timelines. But if you start to see things and they shift early, that is when that communication is super important. That is when you start to get that trust from your investors, that knowing that there are times that the management company cannot control certain things. Market shifts, fear, those all determine your market. Lease up, builder, things outside your control. But if you communicate, you're on site, you're looking at it, you're seeing it, and you bring that back to the investor, those are things that we have learned. So we don't overpromise. We just communicate those things to our investors. Now, in closing, you have seen some of the pain points that we went through that I struggled with in the very beginning of property management, kind of learning how to start to build systems in this organization. Again, we've been doing this for over 10 years now, but in the very beginning, those first years were super painful. And those 5 things I did wrong in my first year, I really did skip the big picture. What was the blueprint? What was I going for? What were we trying to build? What did I want to see? I designed it for like a for sale product when I was starting, believed rosy timelines from the builder, and I just trusted blindly. We hired cheap, didn't hire the right people to sit in those seats. And then ultimately, we overpromised investors in the beginning. So if you're stepping into this space, don't make those same mistakes. Get the big picture. Put the blueprint together. What is your goals? What do you want? What do you want to get out of this? And if you want to see more on how we run projects and how we've scaled past over 3,500 doors under management and continuing, I want you to grab our case study at corybonner.com/case study. If you've liked this video, I've made another one right here.